To prepare Form 990, you need to understand the concept of a balance sheet, or as it is called in the nonprofit world, a statement of financial position. This video is a short introduction to the idea of a balance sheet. Here's what you should remember. Net assets or fund balances equal assets minus liabilities. Assets are what you own, such as your bank account, your equipment, and so on, and liabilities are what you owe. This could be a credit card balance, mortgage, etc. Your net assets or fund balances are just what's left over after you subtract your total liabilities from your total assets. This determines if your sheets are balanced. If this is your organization's very first tax return, the beginning of the year balances are going to be zero. Now, this is not the case if your business has been in business for over a year. When you start entering your assets, ExpressTaxExempt will ask if you have any land, buildings, or equipment you'd like to include. For example, if you purchased office equipment for $1,000, enter your asset here, but be sure to update your cash balance on the following page. When you begin entering your liabilities, be sure that what you include here reflects on your assets entries too. Let's say you use your organization's credit card to update your office furnishings, and it costs $500. Update the amount here, but be sure to include this on your assets as well. Now, if your organization follows the financial accounting standards, enter your net assets with or without donor restrictions. Based on your entries, ExpressTaxExempt will provide a summary of your balance sheet. If you have an imbalance, you can correct your balances by clicking Edit. Following your balance sheet, enter the amount of net assets or fund balances at the beginning of the year and report the net gains or losses on investments reported in the organization's audited financial statements. These financial statements are based on the amounts you entered at the beginning of your Form 990. These include your entries from your statement of revenue, as well as your statement of functional expenses. Based on your entry from your net assets at the beginning of the year and your total revenue and expenses, determines your net assets and fund balances at the end of the year. If done correctly, your balance sheets and entries should be equally balanced.